Welcome to Trading 212's tutorial series on trading strategies. In this tutorial, we will go over how to trade trend reversals with one of the most common reversal price formations, the pin bar. Once again, keep in mind that each strategy in this series will take time and practice to master, so we suggest you take advantage of the free practice account in the Trading 212 Pro platform to try trading trend reversals with live prices. In this tutorial, you will learn what trend reversals are, what benefits trading trend reversals provides, where to place your stop to limit potential losses, and where to take profit when trading trend reversals. What is a trend reversal? A trend reversal is when the market changes direction and starts to move in the opposite direction. An uptrend, which is identified as a series of higher highs and higher lows, reverses into a downward trend by changing into a series of lower highs and lower lows. By extension, a downward trend, which is identified as a series of lower highs and lower lows, reverses into an uptrend by changing to a series of higher highs and higher lows. Reversals can occur at any point and are generally difficult to anticipate, but trading reversals can provide an opportunity to profit from a new trend. If the timing is right, you will essentially be able to profit from the entire new movement and make significant gains. Looking out for reversal patterns can also be beneficial, as they can indicate the need for a different trading strategy. For instance, if you notice a reversal pattern and you have a long position, you may consider closing it to go short to profit from a new downward movement. The pin bar. The pin bar formation is one of the most common price action reversal patterns. The pin bar has a short body and a long wick, essentially showing that for all the trading activity, the price ends up very close to where it started. So from this candle, we can see that the price went to a certain level and then came all the way back near the opening price. Trading pin bars is convenient as you can easily identify them on the charts. They show that the current trend has most likely run its course and is ready to reverse. These are the characteristics of a well-formed pin bar. The wick must be much longer than the body. The wick must also be much longer than the previous bars and stick out from the rest. The body is at one end of the wick, so not in the middle. The price has to close within the previous candle's high or low. To effectively trade pin bars, it is not enough to make sure that it is well formed and has the characteristics we just described. To reduce the number of losing trades with pin bars, trade with additional confirmation, such as support and resistance levels, trend lines, and moving averages. To illustrate how support and resistance levels can provide additional indication that a trend is about to reverse, let's take the following example. In this chart, we see that the price of the instrument is in a strong downward trend. A pin candle forms, but we are not sure whether the price will reverse from here. But if we take into account support and resistance levels, it shows us a clearer picture of what the price might do. We see that the pin forms around the zone of support. Therefore, we can consider it as a strong signal that a reversal might form, because we now have two indications, the pin bar formation and that it formed at the support zone. Once you have a valid pin bar setup, you are ready to prepare your entry. We will discuss 3 ways to enter the market when trading pin bars. All 3 have merit and will depend largely on your trading style and market conditions. To illustrate the entries, we will consider a bullish pin bar. Here you see a pin bar with all the characteristics we just mentioned. The first entry is at the close of this bar. The advantages of this entry is that you are sure to be filled and be in the trade. The second is at the break of the nose. To enter at the break of the nose, you would set a buy stop order just above the high of the wick. The idea here is that if the price went up from this close, then you would be filled and in a good position to take advantage of the price upward momentum. The advantage of this entry is that you can avoid some losing trades. Sometimes the price will fall from the close and plummet until you're stopped out. The trade-off with this entry is that while it can save you from some losing trades, it also means that if it turns out to be a winning trade, this position would put you at a slight disadvantage, as the distance between the tip of the nose and the close can be significant and would negatively affect your risk-reward ratio. The third entry is waiting for a retracement. This is the ideal entry, but also the hardest to achieve. If you've watched our previous video on retracements, you'll know the basis of how trading retracements work. You would set a pending buy limit order at the 50% retracement level. The ideal situation here would be that the price would come down to the retracement level and then shoot up from there, giving you an impressive risk-to-reward ratio. Of course, a very frustrating circumstance would be if the price shot up from the tip of the nose or from the open, leaving your limit order unfilled, missing the trade. Now that you have your entry in place, you need to decide where to place your stop loss. Basically, you should place your stop loss just above or below the pin bar tail. So for the bullish pin bar in our previous example, we would set a stop loss just below the pin bar tail. Where to take profit? If you're new to the trading pin bar setup, we suggest setting your take profit at the first area of support or resistance. When you have some experience with trading pin bars, you could try using a trailing stop. When trading reversals, you don't know exactly how long the momentum of the new trend will last. For this reason, using a trailing stop would allow you to gain the maximum profit from the momentum while having your stop in place when the market turns. In this way, you would hold your position until the trend exhausts and reverses once again. Alternatively, you can also choose to exit portions of your trade to secure profit along the way. Let's go to the platform to demonstrate how to trade the pin bar setup. We have opened the chart for the Australian and US dollar in a candlestick mode at a 1-hour time interval. The pin bar is easily recognizable and has the necessary characteristics. To add confirmation that this is a valid pin bar setup, we check to see that it formed in an area of resistance, as the price previously tested the level here. With this added confirmation, we are now ready to enter our trade. Things to watch out for. Timing is essential in this strategy. If you enter too early or too late, you may miss most of the benefit this strategy provides. However, trading absolute tops and bottoms is extremely difficult and results in bad trades and frustration. A more reasonable approach is not to look at it as a small window of time when you can make the best trade, but rather look for something that qualifies as a good moment. Trends usually last longer than other formations and, if identified correctly, can outweigh any small miss in the timing. Thank you for watching this tutorial on trading reversals. Now that we have showed you step by step how to trade reversals, you can try trading them in the free practice account in Trading 212 Pro. Visit our blog for additional information, and if you have any questions about the strategy, please let us know in the comments section. We will go over other various reversal patterns in following video tutorials. We wish you successful trading with Trading 212.